Blockchain technology is disrupting an endless number of industries, but none more than the world of finance, a moribund market that for decades seemed mostly unmovable as big banks were in complete control. Then along came the decentralized ledger of blockchain, which leveled the playing field and tore down the barriers insulating the oligopoly by offering the potential to transform all types of financial transactions, from remittances to capital formation. For the first time ever, blockchain technology makes it possible for global financial systems to be interconnected, secure, and accessible, as well as fast, cost-effective and efficient. This has opened new market opportunities being exploited by customized blockchain payment solutions providers. Derided by some not long ago as a misunderstood derivative of cryptocurrency, blockchain is now a mainstream technology that is upending the conventional finance world. The name blockchain is derived from individual pieces of data being recorded on immutable blocks that are linked together through a chain, or publicly accessible network. The blocks can include any type of data, including transaction details about money being exchanged, and are uniquely identified with unchangeable code. These qualities make blockchain technology a serious threat to big banks that have been slow to adapt because a decentralized ledger allows two parties to transact without a financial services middleman, which cuts them out of the picture. In a world that is becoming increasingly digital, there is a lot at stake now and in the future. Mordor Intelligence puts a transaction value of the global digital payments market at $5.44 trillion in 2020. And forecast it to climb 11.21% annually to reach $11.29 trillion by 2026. Blockchain technologies also can provide an affordable solution to the 1.7 billion unbanked people in the world that contribute to the roughly $500 billion transferred internationally each year through personal remittances. The new digital financial revolution is exploding, as consumers and businesses the world over change how transactions are done. As with many other industries, the COVID-19 pandemic simply accelerated existing trends as people shopped, entertained, ate and worked from home. Younger generations were already growing up with new financial modalities, and the lockdowns and contagion fears prodded older generations to become more quickly familiarized with digital payments, which has directly benefited companies covering a broad spectrum of fintech market segments. The financial world is going digital, it's just a matter of time, although the transition is still in its infancy. After all, it was only 3 years ago that the Federal Reserve in the US found that ACH transfers were outstripping physical check payments for the first time. Safe to say, the digital payments space still has exponential upside.